value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
It's always a great pleasure to be on.
The throne speech from Ottawa, anything in it to promote business?
Well, I think they promised to do whatever it takes. You know, the classic, that I think the first time I heard it was 10 years ago from Europe, and it translates roughly into that the head of the ECB said they would do whatever it takes, and the market took off at that point and kind of never looked back for several years. But now it's kind of just standard, like, you know, all the central banks say, you know, we'll do whatever it takes. Everybody knows they're going to do whatever it takes. So just saying it doesn't actually have any impact. And of course the possibility with today's speech from the throne where they said they'd do whatever it takes to help, Canadian businesses and Canadian people is they've said it before. And in fact, the Prime Minister said a couple of things that he was going to do, without going into specifics, a few months ago, and then they never happened. So you can say you'll do whatever it takes, but then you run into the realities of what's possible. And the Bank of Canada is already buying, I think they've already bought $300 or $400 billion worth of debt from the government of Canada as the deficit grows. So there probably is some kind of a limit as to what, even though you say you'll do whatever it takes, there's probably a limit to what you can do at some point. We don't know where the limit is. We don't know how you get to it, but it's almost like maybe they're going to try and test where it is this time.
Well, you wonder, you know, if the cupboard is bare, how can you keep promising more stuff? We had a huge deficit going into the financial and COVID crisis. How do you have anything left to fight it with, having started deep in the hole?
Well, yeah, it's, the federal government was the only entity in Canada that actually didn't have a huge debt relative to their size. They were one of the best in the world at 30% of GDP, but with the commitments so far, before today's speech, before the budget, which will be out later, they'd already gone from roughly 30% of GDP up to close to 60% of GDP. So, I mean, there's a little bit more room for them to go, but only if you don't realize that in Canada, unlike other countries, in Canada, the provinces are allowed to borrow. So if you add in the provincial debts, then Canada looks very similar to the other countries in the developed world. Now, Canada, I think, lost its AAA credit rating but from one of the agencies, but not. There's about 3 ratings agencies. One of them dropped them to AA plus, and the other 2 still have them at AAA. So there's only a couple of countries, Germany and Canada, in the larger developed countries that still have that rating. And so Canada could probably go quite a bit further in the debt direction from the federal government. But you know, I don't know what the limit is, but I think one of the things would be if people start to lose faith in the. I mean, you can issue as much debt as you want, and you can spend it into the economy. But if at some point, because we have borrowed quite a bit of money from foreign lenders, if at some point people refuse to lend you money in the Canadian currency, that's where you get into trouble. And that's where all these countries like Argentina and that they've been unable to borrow in their own local currency, say the Argentine, I think it's probably the peso, and they have to borrow in U.S. dollars, and then they can't earn enough U.S. dollars to pay back the debt. That's where you get into trouble.
I want to go back to something that that has been suggested. Why doesn't Canada go back to what it used to do up until the 70s, and that was lend to itself at a decent interest rate, so you don't have to rely on foreign bankers? Any chance of that happening again?
Well, I think that's what they're doing. So when the Bank of Canada buys, I think it's 75% of all the bonds that have been issued so far year to date, which is something like, these aren't the exact numbers, but it's roughly $300 billion or something like that. In essence, that's what they're doing. The Bank of Canada creates money into an account and then uses that money to buy the bonds that the government issues. So, it's a very circular, kind of incestuous kind of thing, but essentially that's the equivalent. And, there's a limit. I'm sure there is a limit, but we probably haven't tested it yet. Canada's still got a very good reputation as being a very solid citizen and prudent fiscal manager and all that, and some of it's not deserved at all when you start looking at the mortgage debt and household debt. But the international markets don't know that, apparently, so they're happy to continue to lend money to Canada. And the way you can test it quite easily is just watch the Canadian dollar. It's still in the 74 cent range. It's come down from 75 cents, but if you see it get down to 64 cents, then you know that there's trouble. And the other thing would be, and this would be really difficult, is if interest rates start to rise. So our interest rates are still very similar to U.S. interest rates. We can borrow, and I think the 5-year government of Canada bond is 0.36 or 0.37 or something like that, so a third of 1%. So that's easy to borrow at that rate. If that were to jump up to 3 or 4%, then you'd know something was starting to go wrong.
Don't low interest rates spell bad news for banks, insurance companies, and pension funds?
Yes, that's the conventional wisdom. I'm sure there's some truth to it. That the banks have been making so much money off the trading, though, that they because they're into everything now. That they don't just do deposits and lending; they do everything else now. They sort of mask the drop in their interest income, but the interest income definitely has gone down. And now that people aren't borrowing as much anymore, the banks are really going to struggle, I think. And generally, how you get out of these things is interest rates go down, people go crazy buying more real estate and more cars, and the banks start making a ton of money again. So we don't know if that's going to happen this time. It's hard to imagine it happening this time because, the people are already deeply in debt, and B, not all of them have their jobs anymore. So pretty hard to apply for a loan if you're unemployed. I think that's, even the most reckless lender would probably frown upon lending money to an unemployed person. So it's going to be tested, but I think the traditional rally out of these recessions that we're in is using basically corporations, but especially households, pushing them to borrow money or accepting that they want to borrow money to buy houses and cars, and that avenue just doesn't seem to be. We used that in 2009 big time. The debt ran way up, and we went into this recession with just too much debt for it to work this time.
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, you're a big Tesla fan. Your family has two of them, and Tesla made its announcement about batteries. Can you tell us about it?
So they had their annual general meeting on Monday, and then they went on for another. They kept everybody at the meeting to talk about Battery Day, they called it, and the technology of it is changing. And they said the market was disappointed. Before I go into some of the details, I'll just let you know the market was disappointed. The stock went down on Monday, and it went down again on Tuesday. Although the company's still worth something like $320 billion, but it's down from being worth quite a bit more than that. What they announced was some pretty significant changes in technology in the battery world. So they're going to make, as most people know, I think the original lithium-ion batteries that went into cars were just very much like a little cell phone battery that essentially got a whole bunch of them got connected together, and then they started to power the car. And so they've been working on that, and it's still more or less the same, but they've decided to format it quite a bit differently so that the cells themselves will be much, much bigger. And they're going to have three different types of batteries now, and Tesla's going to manufacture them themselves. They've already started that instead of relying on people like Panasonic, and one of the biggest ones is CATL from China. They expect the results are going to be a drop of something like 50% in costs, and it's going to take them 3 years, I think, to get there, and an increase in about 50% in range for the car. So this is huge. This means they will be able to produce a car that is perfectly acceptable for $25,000 US or in that range. So this is been one of their goals, and but I think the market didn't like it because they were expecting that they would be there right now when they announced it, and of course they said that it probably will take 3 years to get there. But what they did announce, which might affect me, is they announced a new flagship edition of the car. The Model S is the sort of like the basic. That was the first one, and I have one of those. And it's now going to go. The new one is now going to go 0 to 100 in under 2 seconds. So my car is about 2.5 or 2.6 seconds, and that you wouldn't really notice that, but the big change is the range is going to be over 500 miles or close to 1,000 kilometers. So in the drive from Edmonton to Vancouver I just did yesterday, I had to stop, but we ended up stopping 4 times. We could have gotten away with stopping 3 times, but we decided sometimes it works better if you stop for a shorter time and only partially fill up, and then because of the way the charging works. But with an over 1,000 K range, you could make it all the way with only 1 stop, and that would be fantastic. So they're going to sell a lot of those new cars. I might even have to upgrade mine myself. It's not going to be out till a year from now, so I got time to think about it. But the big change, of course, is not that. The big change was the technology in the battery, and it's going to bring the widespread adoption of electric cars probably up to 10 years from now instead of 20 years from now.
Well, I believe the governor of California has mandated electric cars, and I'm trying to find the exact date, but 10, 15 years from now, because California is such a big car market on its own. Does that influence the rest of the world?
Yeah, I think the date was 2035, he said, and then yesterday China said that they're going to be totally. Now I don't know if I got this right. This is quite an amazing thing. They said their aim is to get totally zero emissions or carbon free, or I don't know exactly what term they used, by 2060. So they've given themselves. Now these are 2 different things, obviously, because cars are just one component of this whole thing. The bigger challenge is everything, right? And one of the biggest things is how they generate electricity, especially in China, is coal-fired electricity plants. So to move would take a tremendous amount. In fact, Elon Musk was talking about it on Monday. He was talking about gigawatts and terawatts, and he thinks they're going to need, for people to transition just in the cars alone, they're going to need 20 terawatts per year of battery production, which is just mind-boggling. So the way people might be able to think of that is 1 gigawatt is the production of a nuclear power plant. So 1 terawatt would be 1,000 power plants. And of course, everybody knows a nuclear power plant is quite a bit bigger than a coal plant. And he's talking about 20,000 plants a year in battery production. So there's 1 billion cars in the world. He's talking about transforming 2% per year. That would be 20 million cars. And he's saying that that's what it would take. So those numbers are really hard to comprehend. And he thinks that Tesla can be producing 5 million of those 20 million cars, so about a quarter. So right now they're producing 500,000 cars. So they would produce 5 million. They would go up 10 times. They would have to have each, what they call them gigafactories. So they have one in China and one in California, and they're building one in Texas, and they're building one in Germany. So say by the end of 2021, they'll have 4 in operation, and they would have to get 6 more and have them all up and running, and then have each of them producing sort of 800,000 cars a year, somewhere in that range. I don't know if that's the way it's going to break out, but the people that are skeptical about the stock price, if they were able to produce 5 million cars a year, and if they were able to make, let's say, $2,000 per car, that's a $10 billion profit on 5 million vehicles. And the stock's currently trading at, say, roughly 300 billion. It's not trading at a huge multiple. That would be about 30 times earnings. Amazon and Google have traded at much higher multiples than that for the last 15 years. So, I think the stock is too expensive. I think the people are paying too much for it, and I suspect it'll come down in this correction that we're in. But longer term, the price might be justified.
Where is all this electricity for electric vehicles going to come from?
Good question. Really good question. So the good thing about electric vehicles is that you can charge them at nighttime. So right now, for example, in Alberta, where I live, they pay big companies like oil sands plants and refineries. Refineries are huge users of electricity. They actually pay them at nighttime because they've got, sometimes instead of shutting down the plant, they like to keep the plant operating, especially coal-fired plants. And so they need somebody to take the electricity because the grid has to be balanced at all times. And so they actually, the price of electricity in the 3 a.m. kind of thing can go into a negative, or as close to zero or even negative at that point. So if the cars were so there's a surplus of power at that time. There's a shortage of power between 5 o'clock and 9 o'clock, the peak. That's the peak time. There's another peak in the morning from 7 a.m. to about 8:30 a.m. And of course, all that's changed a bit with COVID, with people working from home, but generally that's the way it was. So the rest of the day, there's actually a bit of a surplus. So as long as you can get the electric cars to be charged in off-peak hours, they actually might be helpful to help balance the grid. And of course, the other thing is that electric cars don't use as much energy because the electric motor is twice as efficient as the combustion engine motor. So they don't need to take as much energy as we use up in other things. So it is going to take a radical transformation of power generation, though. The intent of your question is correct, and wind and solar may not be enough, and so people are looking at other things if they want to go to zero carbon. there's a whole bunch of anti-nuclear people, but nuclear is zero carbon emissions, and that may be the place they have to look.
We'll have more with Hilliard MacBeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, are we really seeing an exodus from big cities out to suburbs and even the countryside right now because people are being told you don't have to work in a big office anymore?
Well, it's certainly, everybody's talking about it, and I suspect that there is some of that going on. I know that I've read about people in Manhattan, and I've talked to a couple of them, actually. Some of the research services we get provided by people that work in Manhattan and New York, and talking to a couple of them recently. I actually was back in March and April when so many people in New York were dying. They got hit really hard with COVID. And both of them said, independent of each other, I'm not ever going back to work in Manhattan. I'm just not going to do it. And they were working from home, and they had left and gone, to Colorado or something. And so will those people go back to work downtown? I don't know. I think some of them won't. And of course, the big push we've had in Canada, when we start talking about Canada, Toronto, Vancouver, has been condos. There's another story in the Globe and Mail today about shortage planted by the real estate industry, but it's just not true. There's a huge number of units that have been built, and you can check it any number of ways, but the total number of billions of dollars of investment has been record highs for 10 years now. So the problem, though, is what if they've been building the wrong stuff, right? So maybe they built boxes in the sky that nobody wants, and people want more space, and they want to move out of downtown, and they want to move where they got a little bit of dirt and a place to raise a family and stuff. So there could be a shortage, but what will hold it back is two things: the recession. So generally, it can be more expensive to buy a house than it is to buy a condo, and so people barely qualified for what they were buying before. So unless house prices come down, it's going to be very difficult for people to buy what they want. And the second thing is, generally, most people, unless you're in a boom when nobody cares about this kind of thing, most people, they're lending money. They want you to sell the place first before you can buy the other place. So you got to sell the condo to buy the house. And if everybody's leaving downtown, then there'll be no way they can sell their condos, at least not for a price that makes sense. And so they won't be able to move. So it's going to be quite interesting to see how this all works. It's I think it makes sense, although there are some disadvantages. I talked to one tech person. He's got a company that does tech support, and he said providing support for all these people working from home, especially if they are in an area with poor internet connection, like would be outside of the major cities, is a nightmare for his company. So he's committed to provide tech support for a whole company, and they're just working like 4 times harder than they normally would because people don't have the same kind of connections at home. They don't have the best equipment at home. It's just really hard to cope with it. So that may also be something that slows it down. And then there's also there's quite a few people I've seen, interviewed and read about this that are convinced that people need the social interaction that's involved in the office, and they're not going to abandon going to be where all the other people are. They have to be where the other people are. They just can't live that lonely life that would be that at home all alone.
Barbara Streisand was right then. People who need people are the luckiest people.
There you go. If they write a song about it, maybe.
Hilliard, thank you so much for chatting with us.
Thank you.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBethMcLeodGroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@HoweStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.